Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for June 8th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous session, what I mentioned was we still have a very strong market, and right now any pullback likely into the 19, 24, 19, 24, 20 in that zone could offer an opportunity for bulls to defend and squeeze. Price got into 24, 24. And then turned around a little bit here. But we're not out of the woods just yet. Overall, the 2400 level still remains the key level to watch. And at the moment, it appears that we're forming a range at highs, which means we could continue to see this thing swing back and forth a little bit. But as long as price remains above 2400 here, the overall flow remains to the upside. So we may see a little bit of a counter trend move here to the downside, followed by another round of strength. But overall, the medium-term strength is up. Direction is up above 2400. Now, if we look at the intraday time frame right here, what you'll notice here is that price has formed another narrow overnight range. We have about a 6.25 point overnight range. That's about 54% of average daily range over the last 10 days, and we're now trading at the upper end of a very tightly compressed range here. You can see the trading that's happened here. We've seen a rejection of prices above this high. That could again begin to lead this thing back toward the 2720s, lower 24 to 27 zone, and so we could be looking at a pushback this way. Right now we do have an uptrending VWAP for the day, but the next bounce, if it fails to see strength beyond 36s here, that could be a selling opportunity for a push down toward 27s. All right, let's take a look here at crude oil. All right, here's a look at the daily time frame of crude oil. We had a significant sell-off in the previous session. I mentioned that if price could get above 48.42, there could be a big squeeze coming. But that the direction is still down. We had before this rejection of the previous high there on Monday here suggested a likely continuation of 45.20 to 45.17. We've almost gotten there already. We've gotten back to the midpoint of the key range. And one thing that's important about that is that we could then begin to see some sort of bounce off this area back towards 69, perhaps 47.10. So the previous session here, we had a big time sell-off due to the EIA report, expecting a draw, got a build, and that was about the biggest reaction I've seen based off that report in some time. The reactions have been rather muted lately, but this one was really, really big. It happened all at once in the first 5 to 7 minutes, and from there we got pretty much a sideways day the rest of the time with a downward bias. But this is a huge move. Stop run day through that previous low there where the midpoint's right at the low, and now we're continuing lower. Once we find a rejection off these lows, that could be a quick bounce back toward 47s. So say the rejection happens at 45s, that could be a two-handle bounce. Say it happens down here near 44s or 44.50s. Again, it could be a bounce that's quite large. So we'll be looking for signs of rejection. Once that occurs, we could be looking at a quick bounce back up. Here's what it looks like on the intraday. On the intraday chart here, we've seen price after the major sell-off go sideways. We saw price hold above the previous session's close throughout most of the pre-market, and here recently price has sold off. This is a nice impulse range here. If we come back to the midpoint of that range, we might have a key range to work with the rest of the session. Overall, staying below the previous close here suggests more weakness, and again, the next bounce that comes into that area could be defended by bears, and it could also seal that key range. All right, let's take a look at gold futures here. All right, here's a look at gold in the daily time frame. If you remember earlier in the week, what I mentioned was if price pushes up above this high, say into the 1298s, anything above that high could be seen as a potential rejection that could easily lead price back toward composite VPOC, which is currently 1260. So I mentioned that earlier that we could be looking at that. We've already seen quite a move after price did probe beyond the high, getting a high of 98.80. We've already seen a pullback, price currently trading 1285.10. However, it may not be done just yet. The next bounce may be the actual rejection. Price could hang up here for a matter of days as it did before, building energy and then releasing it to the downside. There could be many things that happens. But overall, we could even see a price attempt to push above 1300 one more time and try before a rejection occurs. So right now we're in the zone where we had the 1240 squeeze up. We've been bullish this entire time. And now, once we get into this area, now we're starting to switch our bias to looking for a fade back toward 1260. So just keep that in mind with gold. Now, in the short term, we are trending downward. So in the intraday time frame, we had price push above the previous close. Briefly, it was rejected here twice. Price pushed above it, held for a little matter of time, and then rejected yet again. That's all indicative of further weakness to come. Price is testing below the previous session's low right now, but any failure to hold that level would suggest more weakness here. So right now we do have a rounded top that's played out. I mentioned to our trading room yesterday 1290 was the big level to watch, and the fact that we're breaking 1290 would open up a move back down the ladder a little bit here. And so price tried to hold above 1290 and failed. So right now any bounces toward 1290 likely to be defended by bears for a shot at lower prices. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.